All right. What's up, traders? What's up, tycoons? Today's video, we're going to look at TLT. But first, there's some really important charts and data I want to show you guys. So stick with me for 5 or 10 minutes, and then we'll get into the actual TLT chart, break it down for you guys, and give an update on the technical analysis and the levels we're watching. The first chart we're looking at here is going to be bonds, stocks, and commodities. All right. Now, there's several phases that happen in this, but bonds are here in green. They bottom first. Okay. So when it comes to investing in the stock market, you're going to see a bottom in the bond market first. So that's something that, a lot of people don't know. And it's something that's really helpful and useful for understanding some of the market cycles and the different phases. Right now, none of this video is going to be investment and financial advice. This is all just going to be actual data and charts. Okay. And you can interpret that data and use it to make your own decisions, but just keep remembering that bonds are going to bottom first. Okay. And what's going to happen is eventually the Fed is going to pivot, right? They're going to stop raising rates, and then eventually they're going to start cutting rates. Okay. And so you're going to see the bond market bottom first as a result. But by the time that the Fed actually starts cutting rates, it's usually when things are really bad in the economy and they need to start, stimulating the economy. Now, what this means is that you're likely going to see bad earnings in the stock market around this time or shortly afterwards, right? So that's kind of why stocks tend to bottom afterwards, and then they start to get the incline back up versus the decline. Now, bonds also peak first, and they peak before stocks, okay, and they peak before commodities. So just keep this in mind. This is a really useful chart just for kind of understanding how, investing in the different areas, right, whether it's bonds, stocks, and commodities, kind of work out. What we're going to look at are some of the bullish things in the market currently, right? This is actually Ford Motor Company on the daily chart. And I gave you guys this play basically in my last free video right here. We had the beginning of the momentum crossover. We had this demand zone where we had 1, 2, 3 bounces, right? We established an area of demand, and we have these 2 supply zones up here that we're really watching to see, are we going to get a sell-off, and are we going to try to move back up to these zones? We had the 2 gaps here, and I said, hey, we're starting to get the momentum crossover. We see momentum exploded up. All right. And we actually broke past our 61.8 retracement of this downside move. So we look at the move to the downside. We would be expecting something like this, but right now we are closing above, and we filled that gap up here right around 13. That was very, very nice to see. In the Discord, we did get a 24% swing trade on this. So if you guys ever want to, be a part of our trading community, join our Discord, trade with us, see what we're getting in and out of, as well as the various data and intel sources. All you have to do is use the link in the description. And if you actually use the code Zackley, like the channel name Zackley Trades, you can get a discount on your membership. Okay. Now, what we're looking at here is the Russell 3000 and also the percentage of 52-week highs. So we see the percentage of 52-week highs peaked in March 2021. And then we actually get the peak over here in January 2022. All right. And we start to see everything decline. If we come over here, we can see that the peak of percentage of stocks hitting new 52-week lows, this bottomed in May and June. And a lot of people are wondering, is this the stock market bottom in October? Now, the Russell 3000 and small caps in general, those have been really outperforming and kind of leading the way in strength in the stock market. The S&P and obviously the NASDAQ, they have a lot more of big tech in them. And big tech has been one of the biggest things really seeing a lot of the pain in the market, right? You look at, plays like Tesla, Amazon, Google, Netflix, Facebook, Meta, right? The next one we're going to look at here is since the peak of the dollar. Okay, the dollar peaked over here in September 26th. The dollar is going to be right here in green. It's down 8%. We have a few things that are up pretty nicely, right? We have the Dow Jones Industrial Average is up pretty well. We have silver. Okay, and now silver, all right, so silver and gold have been performing really well. I highlighted this in my last video. Silver is actually the best performing one. It's up 31%. A really good analogy for it is think of if gold and silver are like crypto, think of gold as Bitcoin, And think of silver as the altcoins. Okay, everybody knows that when the bull market is going on, the altcoins, definitely way outweigh the gains of Bitcoin, right? And they outperform in the bull markets, and then they underperform in the bear markets, right? So, when it comes to investing in, metals like gold and silver, silver is going to run harder when things are running, right? Gold up 12%, silver up 31%. But something else is we have emerging markets, right? And a lot of people really wouldn't expect emerging markets to be performing so well right now, but that's what this video is, right? I'm basically just showing you guys that there's always a bull market somewhere. You just have to look hard enough and find it, right? And so in this slide presentation, we're actually going over some of the bullish things in the market and some possible trade ideas for you to look some more into. Okay. Like the Ford one, I gave you guys that Ford setup. It had a really nice double bottom slash triple bottom. We have that nice demand zone. We're looking to see if we can get a W pattern, a nice, double bottom bounce. Over here, what we have is the S&P 500 sectors versus their moving averages. And if we take a look at the XLE, right, the energy sector, it's above the 5-day moving average, the 10-day moving average, the 20-day moving average. It is below the 50-day, but it's above the 100, the 150, the 200, and the 250. We have financials, right, doing very well above most of their major moving averages as well. We have industrials, we have consumer staples, we have a healthcare sector. These are the sectors that are showing strength in the market right now and outperforming the S&P on a relative basis. So you can start to try to look at some of these, right? And you can try to go into the actual sectors themselves, or you can do some research on some of the individual companies and individual stocks in these sectors and take a look at some of those. Right. The next slide is just going to visualize this for you. Right. So we see over here, we have all of our sectors on the charts here. We have XLE up the most, up 22%. We have XLI, XLB, XLF, XLV, XLP, XLU, and XLK are really all leading the market right now. And we have XLY, which is really, has a lot to do with Amazon, right? Like Amazon is a big proportion of XLY, and that thing is definitely underperforming very, very much. It's the consumer discretionary sector, and you have to think, right? If we're heading into a recessionary environment, consumer discretionaries aren't necessarily what you want to be in, right? We're seeing staples, right? XLP outperforming. Financials are doing pretty well, right? Typically financials will do good in high interest rate environments. So just wanted to show you guys some of this. XLB is actually the material sector. And that's like the third best performing out of all the S&P 500 sectors right here. And now this is all in Q4, okay? Q4 of 2022. It's a new year, so we're going to see if this pattern can continue and if these sectors are going to continue outperforming or if something is going to change in the landscape. Right. Now this is the best and the worst yearly S&P 500 sector dispersion, and this is the worst it's been really in a very long time, right? 99.46, and we have XLE versus XLC. So XLE being the best and XLC being the worst, and the difference between them is 99.46. Now we can see that this has happened before back in 05, but it was not to this extreme degree, right? And a lot of times in these, XLC is often the worst performing, multiple times in through here, right? And actually you can see XLE energy is one as well, right? And XLE is considered a little bit more defensive, right? And energy stocks. And we're really seeing those outperform right now, especially versus the XLC. So just wanted to go ahead and show you guys that. And right here, what we're looking at is financials versus technology. And so this kind of highlights what I was talking earlier. A lot of big tech is really what's suffering and dragging the market down. We have the COVID lows over here right now, right? We fell through it as support, and former support becomes resistance. We've tested it a few times over here, and it looks like it's ready to go and get a breakout. So it's going to be really interesting, and what you're seeing here is basically financials going down, and we're starting to see it finally recover, and it looks like we could get a breakout, right? So that's something to kind of just monitor. Take a look at some financial stocks. We have lots of bank earnings coming up very soon. This is XLE versus XLK. So this is very similar to the chart that we looked at over here, the March 2000 lows. Then we tested a couple times, and then boom, here we get the breakout. So if we go back to the previous slide, all right, now again, it's not financial advice, but we're just looking at some data. It does look like this could be ready to go and do something similar to what XLE/XLK is doing, right? The setup is there. We just have to see what's going to happen in the future. This is technology versus financials, okay? And we can see that, it's been outperforming for a while. Okay, we basically had a nice cup and handle pattern right here. And, tech was just really leading the way. But look at what we got here. It's rolling over, right? So, you see we have this rounded bottom right here. Okay, and then now we have this rounded top right here. And XLK to XLF, is basically just showing that, hey, here recently, technology versus financials does not look good, and it is starting to see a decline, right? And in the blue line here, we have growth versus value. There's a few different ways to measure growth versus value, but this is IWF versus IWD. And we can see basically that growth is really just underperforming right now, and a lot of tech companies are growth companies. Now, gold, I mentioned gold earlier. This is a really, really nice chart. This is gold compared to TLT and gold compared to the S&P 500. And we have a nice cut pattern right here. Okay, nice rounded bottom. And we're just continuing this uptrend right here. We hit new all-time highs on this pair right here, and on this pair, we hit new 6-month highs. So it's going to be interesting. Will gold continue to outperform TLT and the stock market as well? If we take a look at the next slide, what we're going to look at is basically gold compared to all of the major currencies in the world, right? So over here, we have gold priced in Canadian dollar. We have gold in British pounds, gold in Japanese yen. And look at how it's performed in some of these, right? So we have the setup here, and then in Japanese yen, we got the breakout, right? Gold priced in Kiwi, in the euro, in the Australian dollar, and the Chinese yuan, and the South African rand, and the Indian rupee. We all have that very similar setup, and we may see something like this happen, that happened with gold priced to Japanese yen, where we get that nice breakout to the upside. This is the silver's futures, okay? And so basically right here, we have silver and the gold futures. We can see we have this area of demand right here, okay? And we're bouncing, we're really holding these levels very well on the gold and the silver's futures. We have a little oopsie daisy right here, right? And we start to see we break through this zone. And to me, this is what I like to call a liquidity grab, right? So market makers are wanting to buy here, wanting to buy here, wanting to buy here, but there's not enough sellers right here, right? And so what they have to do is they have to trigger some stop losses, all right? And them triggering those stop losses, you're actually selling to them. When you get stopped out and place a sell order, someone is buying from you, right? So a lot of times market makers do things like this where, they kind of just trigger people's stop losses below a demand zone only to push things back up higher, right? Gold futures, new 6-month highs, silver futures, new 6-month highs. Now this is an individual, one you can look at. This is FLX, okay? This is the gold and silver index, XAU, all right? And we can see here that this also looks like a nice cup and handle, right? So we've got our cup here, we've got a handle forming, and it looks like we could be getting some type of a breakout here. So, if you wanted to check XAU out, you can definitely do that. Check XAU out. Occidental Petroleum, okay, Oxy. We talked about XLE being the best performing sector. All right. Berkshire Hathaway has been accumulating, buying lots and lots of Occidental Petroleum, lots of Oxy. He owns tons of it. And he, possibly could be looking to own even more. So, if you're looking at it, we have right here what's the Buffett zone. If we go into the next slide, this is pretty much the Buffett zone, explained to you guys very, very nicely. So look at his average price, okay? Warren Buffett is buying in between $50 and $59, anytime really below 60. So he's accumulating between 50 and 60. All right. He's got an average cost of $54.63. And he owns like $9 billion worth of this company, right? So really, really wild. Been accumulating tons and tons of shares at a time. And if we go ahead and take a look back at the chart, he's accumulating here between 50 and 60. So, keep that in mind. I'm not saying you have to mirror Warren Buffett or that trying to emulate him is going to give you success, but this is the area where he's buying, right? He's not really buying the highs up here. He's accumulating down here in this range right here in between 50 and 60. So it's going to be real interesting to see what can happen. You can see these were prior levels of demand before, and so he's coming in and buying these levels at these same levels again. So yeah, I just wanted to kind of go over some of this stuff. We have crude oil right here. And so this shows you, basically when this is going up, all right, that means that the S&P is outperforming the crude oil index. Or when it's going down, this means that the S&P is underperforming. Now, does this look like something that you want to, be investing in right now, at the S&P versus crude oil, right? It's looking bad, right? It's looking like it's starting a bearish trend and like it could continue to head downwards or even just consolidate sideways a little bit. So, take a look, and that's kind of why we showed Oxy, right? And when you look at the crude oil futures versus the S&P 500, the S&P 500 does not look too strong compared to those. Now, we'll go ahead and get into TLT now, all right? Appreciate you if you made it this far. TLT, we've been tracking some very nice patterns, all right? And we're using the Elliott wave. We're tracking a larger 1, 2, 3, 4, 5 impulsive move to the downside, and your wave 1, your wave 3, and your wave 5 are going to be 5-wave impulsive moves. So you can see here we had a wave 1 down, a wave 2 up, wave 3 down, wave 4 up, wave 5 down, and after we completed our wave 5, we got an ABC correction wave up. Then we start our 1, 2, 3, 4, 5 back down, and we got our ABC wave up already. We've already completed the ABC up, and it looks to me like we've started our 5-wave impulsive move to the downside. Now, I'm not a fortune teller. This has been performing and really working all year, especially since I started dropping these videos. We started recording them right around here. We got the breakout. We completed the C wave up. We've started our wave 1 down. We got a very nice bounce off of the trend line. We're filling the gaps, but notice what we did here. Okay, to me, it seems like we got that bearish signal that I was telling you guys about before in previous videos, right? Whenever you get a half gap fill. So, we mentioned that when we were starting to bounce here, that we could be getting some type of a bull trap. And the reason being is because I thought that this wave 1 was down. It would make sense for us to bounce off of this trend line and start a wave 2 up, right? And potentially fill some of these gaps up here that we needed to fill. Well, take a look. We pretty much filled half of this gap right here, and then we got to move to the downside. A half gap fill is bearish. Now, it doesn't mean it's long-term bearish, okay? Because if you see, TLT did drop and we got bearish activity already. So it doesn't mean we can't go back up higher. But now is a really good time to demonstrate some patience in the market, right? We don't want to rush into anything. We want to see, is this actually going to play out as a 1, 2, 3, 4, 5 down, or are we getting an impulsive move out of this pattern into a 5-wave instead of a 3-wave, right? So we had the ABC. Okay, this could turn into a 1, 2, 3, 4, 5 and continue up higher. So you need to be pretty cautious. I wouldn't go heavy in anything right now. Let things play out. We have CPI coming out very soon. That's going to be a very, very big factor. Okay, CPI is going to affect the market a lot. We're trading right in between a few gaps, right? So we have 2 gaps up to fill, and we have 2 gaps down to fill. So we really can go either way right here, right? We could get that 1, 2, 3, 4, 5 up and try to fill this gap on TLT right around 111. Or we could get 1, 2, 3, 4, 5 down and take TLT to anywhere between 80 and 90. So you need to be cautious. The main thing that I really look for is the MACD sell signal. And that's what I was preaching in a lot of my videos in the past. Right over here is when we got our MACD sell signal. And then we got that sharp move to the downside. Right now, what we have, if we zoom in on the MACD a little bit more, we see it just barely curled above the white line right here. And we're starting to see it trend up. But if this thing doesn't continue in an upwards motion and the red line crosses below the white line on the MACD, that could be another sell signal, and that could get our wave 3 down on TLT. So stay tuned for that. Just be careful right now. Don't really force any trades. We're doing very well, respecting our analysis and following the patterns. We got the nice wave two up. And this wave two could be completed, but it definitely could still extend higher, right? This is just a guideline. These lines right here, this is just a guideline that we drew before we even actually got to any of these levels, right? So this wave two could push up higher, right? It's possible it could push up down up to 108, 109, right? Or it's very possible that we went ahead and we topped out here at that half gap fill, and we could be starting the bearishness down below. If CPI comes in higher than expected, then you can definitely expect to see TLT drop. If CPI comes in around expectations or lower than expectations, then most likely we're going to see a nice move up in TLT. So it's a very binary event. These catalysts, pretty much every economic report these days is a major catalyst in the market. So just keep an eye out on those. And yeah, that's all I'm looking for on TLT, right? Are we going to continue to see this MACD trend up, suggest that we're in a bullish trend, or are we going to get that MACD sell signal and see it curled back down below? Is our wave two up completed, or possibly does it have room higher to go? So thank you guys for watching the video. Don't forget to smash the like button and subscribe to the channel if you're new, and I'm out.